Welcome to IRA's seminar on the Overseas Vendor Registration, or OVR, Regime for Goods and Services Tax. This seminar explains the extended OVR rules and highlights areas that local vendors need to take note of in order to comply. For this seminar, we will be going through the overall mechanics of the regime before we cover implications applicable to local persons. If you are an overseas person, you may wish to refer to our other video on Extended Overseas Vendor Registration Regime. The link may be found in the description below. You may also find timestamps to the various segments in the video description below. First, we will start with the scope of the Extended OVR regime. Next, we will look at when EMO and Redeliverers are regarded as suppliers, followed by the implications of the extended OVR regime to local vendors. We will then look at the GST registration requirements for the local vendors before sharing more on double taxation for imports of LBG and the exceptions that are available to the local vendors. Lastly, we will explain the time of supply and transitional rules and end the seminar by explaining how local vendors can prepare for the extension of the OVR regime. First, we will take a look at the scope of the extended OVR regime. From 1st January 2023, the Overseas Vendor Registration Regime will be extended to business to consumer, also known as B2C sale of goods, imported via air or post with value not exceeding $400, also known as low-value goods, as well as B2C imported non-digital services. Business to consumer refers to transactions made by a GST registered person to a non-GST registered customer, which includes non-GST registered individuals and businesses. Digital services, currently subject to GST, will remain taxable. Both digital and non-digital services will be known as remote services under the extended regime. We will cover the definition of remote services in LBG in the subsequent slides. What are remote services? Remote services are defined as any services where, at the time of the performance of the service, there is no necessary connection between the physical location of the recipient and the place of physical performance. Some examples of remote services are supply of digital products, such as mobile applications and e-books, supply of professional services, and supply of personal services. Here are some examples of services that are excluded from the extended OVR regime. Services that fall under these four types are excluded from the scope of the extended OVR regime. They are exempt services that fall under the 4th schedule of the GST Act, services that qualify for zero rating under Section 21(3) of the GST Act had they been provided by a local supplier, services provided by an overseas government that are of a nature described in the schedule to the GST Non-Taxable Government Supplies Order of the GST Act, and on-the-spot services that require the customer to be physically located at the place where the services are provided. Do note that the GST-registered local suppliers are still required to charge and collect GST for their supplies of on-the-spot services in Singapore. The exclusion for on-the-spot services performed outside Singapore applies only to overseas suppliers, including overseas establishments of local suppliers and electronic marketplace operators supplying services for overseas underlying suppliers. For more examples of remote services under the extended Overseas Vendor Registration Regime, you may refer to Annex A in our in-text guide on taxing remote services by way of the Overseas Vendor Registration Regime, available on our website. We have also included a link to the e-text guide below in the video description. What are LBG? LBG is defined as goods which, at the point of sale, are not dutiable goods or are dutiable goods but payment of the customs duty or excise duty chargeable on the goods is waived under Section 11 of the Customs Act, are not exempt from GST, are located outside Singapore and are to be delivered to Singapore via air or post, and have a value not exceeding the GST import relief threshold of Singapore $400, hereinafter referred to as the entry value threshold. To determine if the goods fall within the definition of LVG, we look at the sales value of the goods to determine if the value of the goods fall within the entry value threshold of $400. Sales value refers to the selling price of the goods, which is the amount of consideration received or receivable for the supply, but excluding any amounts charged for transportation and insurance costs, any GST chargeable on the supply of LVG, and any duties payable to Singapore Customs. Please note that the sales value is for the determination of the entry value threshold and is different from the value of a supply of LVG on which GST is chargeable. The value of supply of an LVG would include amounts paid by the customer for related services such as transportation and insurance, and GST is charged based on this value. More details will be provided in slide 11. When a customer who is not GST registered in Singapore purchases multiple goods from an OVR vendor, the OVR vendor may bundle and ship the goods in a single consignment or as individual consignments. Regardless of the way the goods are bundled for shipment, the goods should be disaggregated and valued separately as separate items, even if the combined value of the consignment were to be greater than the entry value threshold. In other words, the entry value threshold would apply individually to each item of goods supplied. However, there is an exception where OVR vendors may make an election to apply the entry value threshold on a per-consignment basis if certain conditions are fulfilled. Further information on this exception will be shared later in the subsequent slides under the exceptions that are available to OVR vendors for the importation of LVG. Next, let us look at example 1, which provides more clarity on the usage of sales value to determine the entry value threshold and the value of supply on which GST is chargeable. In this example, a dress is listed for sale at $420, which includes a separate and explicit charge of transportation and insurance fees of $25. To determine whether the supply of the dress falls within the entry value threshold to determine if it is LVG, supplier A is required to exclude the transportation and insurance fees charged to the customer. Thus, the sales value of the dress would be $395 and it is an LVG. On the other hand, the value of supply of the dress is $420, which includes the transportation and insurance fees of $25. The GST will be 7% of this value of supply, which amounts to $29.40. Supplier A hence collects a total monetary consideration of $449.40 from the customer, being the summation of the value of supply and GST amount. Next, we will take a look at when EMOs and redeliverers are regarded as suppliers. Electronic marketplace operators are regarded as the supplier of the imported LVG or remote services if any of the 5 prescribed conditions are met. The first condition is the marketplace authorizes the charge to the customer. This means that the marketplace communicates the liability to pay to the customer and influences whether or at what time the customer pays for the supply. Most marketplaces would be regarded as the supplier due to this first condition. For this condition to be met, it is not necessary for the electronic marketplace itself to collect or receive the payment or be involved in the entire payment process. For example, to authorize the charge, the electronic marketplace may only initiate the process by which the customer is charged, including situations where the electronic marketplace website connects the customer to a third party who processes the payment. The second condition is the marketplace authorizes the delivery of supply to the customer. The marketplace may deliver the item itself or notify a third party to commence delivery on its behalf. The third condition is the marketplace sets the terms and conditions under which the supply is made. The marketplace may have influence over pricing, require specific payment of delivery methods, or provide customer support or own customer data. The fourth condition is the documentation issued to the customer identifies the supply as made by the marketplace. This includes receipts, invoices, or information displayed on the marketplace website. The fifth condition is the marketplace and merchant contractually agree that the marketplace is responsible for GST obligations. Considering the conditions in totality, most electronic marketplaces would be regarded as the supplier, except platforms that purely provide listing services. Next, we will look at who are regarded as redeliverers. Redeliverers typically provide ship for me and/or buy for me services to customers who wish to procure particular goods from overseas vendors that do not ship to Singapore. Under Ship for Me services, redeliverers assist customers to ship their purchases from overseas to Singapore by providing an overseas forwarding address. The customer will instruct the supplier to deliver goods to this overseas forwarding address, and the redeliverer will arrange to ship the goods to Singapore. Under Buy for Me services, redeliverers assist to place orders of goods from the supplier on behalf of the customer and arrange for the shipment of the goods from overseas to Singapore. For such an arrangement, the supplier or electronic marketplace cannot be expected to account for GST on the supply, as they are unlikely to know that the goods are ultimately destined for import into Singapore. Therefore, redeliverers would be in a better position to determine if the goods are to be imported into Singapore. Consequently, local and overseas redeliverers would be regarded as the suppliers for LVG supplied by local and overseas suppliers and electronic marketplace operators when certain conditions are met. Redeliverers are regarded as the supplier of the LVG if no electronic marketplace operator is treated as the supplier of the goods, the supplier of the goods does not deliver or arrange the delivery of the goods to Singapore, and the redeliverer delivers or facilitates the delivery of the LVG to Singapore and does one or more of the following: provides or facilitates the use of an address outside of Singapore for the delivery of the LVG, or purchases or facilitates the purchase of the LVG. We will now take a look at the implications of the extended OBR regime to local vendors. Specifically, we will explain the GST treatment for certain transactions made by the local vendors who supplies LVG and remote services. Vendors who make B2C supplies of LVG and/or remote services to customers in Singapore are subject to the OBR regime. For local vendors, they are local suppliers with goods located outside Singapore and supplying LVG to Singapore, local electronic marketplace operators when the electronic marketplace is regarded as the supplier, and local redeliverers when the redeliverer is regarded as the supplier. For overseas vendors, they are overseas suppliers where the overseas supplier's belonging status is outside of Singapore, overseas electronic marketplace operators when the electronic marketplace is regarded as the supplier, and overseas redeliverers when the redeliverer is regarded as the supplier. Please note that the information presented in this deck of slides are information applicable only to local vendors. Please refer to the other deck of slides on extended overseas vendor registration regime if you are an overseas supplier, an overseas EMO, an overseas redeliverer, or a local supplier with an overseas establishment supplying remote services. Local suppliers with goods located in Singapore are not affected by the extension of the EOBR regime. The existing GST treatment applies. For goods located in Singapore and sold and delivered in Singapore, the current GST treatment is to charge GST at the standard rate. Goods exported may be zero-rated, subject to the supplier obtaining all the export documents as required in our e-tax guide on exports. From 1st January 2023, goods located in Singapore and sold and delivered in Singapore, either directly or through electronic marketplaces, will continue to be standard rated. Again, goods exported out of Singapore may still be zero rated, subject to the same conditions as required in our e-tax guide on exports. Local suppliers whose goods are located outside Singapore and make supplies of LPG to Singapore are affected by the extended OBR regime. Firstly, direct sales refer to goods that are supplied directly to customers who are not GST registered in Singapore, for example, through the supplier's own website, instead of supplying the goods through an electronic marketplace or redeliverer. Direct sales of LPG by local suppliers to customers who are not GST registered will now fall within the scope of GST. GST registered local suppliers would be required to charge an account for GST on the direct sales of LPG to customers who are not GST registered in Singapore. For direct sales of LPG, the local supplier is required to indicate its GST registration number and whether GST was paid at the point of sale on the shipping documents and pass the information down the logistics chain to prevent the collection of GST again at the point of importation. For goods located outside Singapore at the time of sale and subsequently imported into Singapore, the current GST treatment for the sale of such goods to customers in Singapore is that no GST needs to be charged, as such sales are outside the scope of GST. Import GST is payable by the customer if goods are imported by sea, land, or CIF value exceeds $400 for goods imported by air or post. From 1st January 2023, such direct sales of LPG to customers who are not GST registered in Singapore will be a standard rated supply, and there is a need to charge GST on such supplies of LPG. However, for direct sales of LPG to GST registered customers, local suppliers are not required to charge GST if customers provide their GST registration numbers. If GST was wrongly charged, the local suppliers should refund the GST to the customers. For sales of LPG made through an electronic marketplace or redeliverer to customers in Singapore, local suppliers are not required to charge GST if the electronic marketplace or redeliverer is regarded as the supplier of the LPG. In such cases, the electronic marketplace or redeliverer is responsible for charging and accounting for GST instead of the local supplier. For sales of LPG through an electronic marketplace or redeliverer, the electronic marketplace or redeliverer is required to indicate its GST registration number and whether GST was paid at the point of sale on the shipping documents and pass the information down the logistics chain. If the local supplier sells through the electronic marketplace but ships the goods and prepares the shipping document instead of the electronic marketplace, the local supplier will need to indicate the electronic marketplace GST registration number and whether GST was paid at the point of sale on the shipping documents and pass the information down the logistics chain. I'll further elaborate on the GST treatment for sales of LPG made by local suppliers through electronic marketplaces or redeliverers to customers in Singapore in this slide. From 1st January 2023, for such sales of LPG made through an electronic marketplace or redeliverer to customers in Singapore, local suppliers are not required to charge GST if the electronic marketplace or redeliverer is regarded as the supplier of the LPG. If regarded as the supplier, The electronic marketplace or redeliverer is responsible for charging and accounting for GST instead of the local supplier. Local electronic marketplace operators can make supplies of LPG and/or remote services through its marketplace. For supplies of LPG through the marketplace, once the local electronic marketplace operator is regarded as the supplier, it is required to charge and account for GST on supplies of LPG made on behalf of both local and overseas suppliers to customers who are not GST registered in Singapore. The local electronic marketplace operator is required to indicate its GST registration number and whether GST was paid at the point of sale on the shipping documents and pass the information down the logistics chain. For customers that are GST registered, it is not required to charge an account for GST on the supplies of LPG if customers provide their GST registration number. For supplies of remote services through the marketplace, once the local electronic marketplace operator is regarded as a supplier, it is required to charge an account for GST on supplies of remote services made on behalf of the overseas suppliers listed on its platforms to non-GST registered customers in Singapore. For customers that are GST registered, it is not required to charge an account for GST on the supplies of remote services on behalf of overseas suppliers if the customers provide their GST registration number. Local GST registered suppliers that make supplies of services through the electronic marketplace will continue to account for GST in their own GST returns. For local redeliverers, the current GST treatment is that the supply of international transportation services is zero-rated and the supply of goods by buying goods on behalf of customers is out of scope if the goods are located outside Singapore. However, from 1st January 2023, local redeliverers will be regarded as a supplier of a single supply of LPG that they assist non-GST registered customers to purchase and/or deliver to Singapore. They will have to charge GST for the supply of goods and the supply of international transportation services to their non-GST registered customers, and thus supplies will no longer be zero-rated or out of scope. Once the local redeliverer is regarded as the supplier, it is required to charge an account for GST on supplies of LPG made by local and overseas supplier for which it assists its non-GST registered customers to purchase and/or deliver to Singapore. The local redeliverer is required to indicate its GST registration number and whether GST was paid at the point of sale on the shipping documents and pass the information down the logistics chain. For customers that are GST registered, it is not required to charge an account for GST on the supplies of LPG if customers provide their GST registration number. We will now take a look at the implications of the extended OBR regime to local vendors on their system and process changes. For local vendors that are registered for GST currently, they do not need to register for GST again. They will proceed to charge an account for GST on the supply of LPG and/or remote services from 1st January 2023. Local vendors will need to make changes to their accounting systems and all business processes to identify whether there is a need to charge GST on their supply of LPG and/or remote services by determining 1. Where the customers belong. For local EMOs supplying remote services on behalf of overseas suppliers. 2. Whether the goods are imported into Singapore. For LPG sales. And 3. Whether the supplies are B2C supplies by collecting GST registration numbers of their customers. For local electronic marketplace operators of remote services, when determining where customers belong, the existing belonging status guidelines apply. For corporate entities, we look at the business establishment and fixed establishment rules. For individuals, we look at their usual place of residence. However, to ease compliance, local EMOs supplying remote services on behalf of overseas suppliers may instead maintain two pieces of non-conflicting evidence based on the following proxy categories to determine the belonging status of customers. 1. The payment proxy. For example, credit card info and bank account details. 2. The residence proxy. For example, billing or home address. And lastly, 3. The access proxy. For example, the IP address of the customer. The two evidence pieces should comprise one payment proxy and either a residence or access proxy. However, if the payment proxy is not available or is contradictory, the local EMO is required to obtain two pieces of non-conflicting evidence consisting of a residence and access proxy each. For LVG, they are regarded as imported into Singapore if the goods are delivered from outside Singapore to a recipient in Singapore. A supply of LVG is regarded as delivered from outside Singapore to a recipient in Singapore if the goods are located outside Singapore at the point of sale and the shipping address indicated by the customer shows a Singapore address and the goods are delivered to that Singapore address. Lastly, local vendors will need to determine whether their supply is a B2C supply. B2C stands for business to consumer and refers to transactions made by a GST registered person to a non-GST registered customer. By default, local suppliers supplying LVG and local EMOs or Redeliverers that are regarded as the suppliers of LVG and remote services will treat their supplies as being supplied to non-GST registered customers and charge GST on their supplies. GST registered customers are responsible for providing their GST registration number to the vendors so that GST will not be charged. The local vendors will have to make certain system changes to allow customers that are GST registered to provide their registration number. To ascertain if the GST registration numbers given by customers are valid, local vendors can perform a check via the GST registered business search function available on IRA's website. Penalties have been legislated for misrepresentation of GST registration status and belonging status by non-GST registered customers. Do also note that local vendors are required to provide a refund to GST registered customers for GST incorrectly charged on supplies to GST registered customers. We will now proceed to explain the GST registration threshold of local vendors under the extended OBR regime and explain when they need to register for GST. GST registration for local vendors will follow the domestic GST registration rules. They must register for GST if their combined turnover is, under the retrospective view, more than 1 million at the end of the calendar year, or, under the prospective basis, expected to be more than 1 million in the next 12 months. Do note that the 100,000 registration threshold based on the value of B2C supplies of LVG and remote services to Singapore does not apply to local persons. For a local supplier who make direct sales of LVG to non-GST registered customers in Singapore, as well as sales through EMOs, the local supplier, in computing its combined turnover when determining GST registration liability, is required to include the value of such direct sales of LVG, include other standard rated and zero rated supplies, and exclude the value of sales of LVG through EMOs that are regarded as suppliers. Do note that for sales of goods located in Singapore supplied through EMOs, they are to be included in the combined turnover under point 2. For a local electronic marketplace operator, if it is regarded as the supplier, it is required to include these 4 types of supplies in computing its combined turnover when determining its GST registration liability. They are to include supplies of LPG made by local and overseas suppliers to non-GST registered customers via its marketplace, remote services made by overseas supplier through its marketplace to non-GST registered customers in Singapore, its own direct sales of LPG to non-GST registered customers, and its own standard rated and zero rated supplies. Examples are listing fees and commissions. When the local marketplace operator is GST registered, it will need to charge an account for GST on such supplies instead of the suppliers, regardless of whether the suppliers are GST registered or not. For a local redeliverer, if it is regarded as a supplier, it is required to include these three supplies in computing its combined turnover when determining its GST registration liability. They are supplies of LPG made by local and overseas suppliers to non-GST registered customers, for which it assisted non-GST registered customers to purchase and or deliver to Singapore, its own direct sales of LPG to non-GST registered customers, and its own standard rated and zero rated supplies. When the local redeliverer is GST registered, it will need to charge an account for GST on such supplies instead of the suppliers, regardless of whether the suppliers are GST registered or not. Next, we will cover what the local vendors have to do if GST was collected at the point of sale. From 1st Jan 2023, local vendors are required to include the relevant GST information in the commercial documents which are passed through the logistics chain if GST has been charged at the point of sale. The relevant GST information refers to the GST registration number of the local vendor and an indicator showing GST has been charged for each item. Logistics service providers would then be required to provide the information to Singapore Customs in a timely manner so that import GST will not be imposed on goods where GST was already collected by the local vendors. We have summarized the responsibilities of each party in this slide. For local suppliers that make direct sales of LPG, the local supplier is required to indicate its GST registration number and whether GST was paid at the point of sale on the shipping documents and pass the information down the logistics chain. A local supplier that sells through the electronic marketplace but ships the goods and prepares the shipping document instead of the EMO will need to indicate the electronic marketplace GST registration number and whether GST was paid at the point of sale on the shipping documents and pass the information down the logistics chain. For local EMOs that are regarded as the suppliers of LPG, the local EMO is required to indicate its GST registration number and whether GST was paid at the point of sale on the shipping documents and pass the information down the logistics chain. For local redeliverers that are regarded as a supplier of LPG, the local redeliverer is required to indicate its GST registration number and whether GST was paid at the point of sale on the shipping documents and pass the information down the logistics chain. If the relevant information is not presented upon importation, double taxation might occur. GST may be collected twice, first by local vendors and again at Singapore Customs border under the following situations. Firstly, multiple LPG shipped as a single consignment could result in the total CIF value to be above $400, which means that the GST will be collected again at customs borders since the CIF value is above $400. Secondly, for imported goods sold in a foreign currency, there could be exchange rate fluctuations arising from the differences in timing in the application of the exchange rates by the suppliers and by Singapore Customs. Goods that were under the value of $400 could exceed the threshold due to the timing differences in the application of the exchange rates, which will result in GST being collected again at the customs border. Lastly, local vendors are required to use the sales value of the goods to determine whether the goods are considered LPG, which excludes insurance and freight costs. However, the customs value is based on the cost, insurance, and freight (CIF) value at the time of importation to determine whether the import exceeds the GST import relief threshold of $400. Thus, there could be instances where the local vendor charges GST on the supply of LPG as the sales value of the goods is below $400, and during importation, the CIF value of the goods exceeds $400, which will result in GST being collected again at the customs border. Hence, it is important to include the relevant GST information. If the relevant information is not presented upon importation and double taxation occurs, the customer can seek a reimbursement of GST from the local vendor. The local vendor must provide a refund to the customer if the customer produces evidence to substantiate that import GST was paid to Singapore Customs. If the local vendor has already filed and paid the GST collected in the GST return, it may seek a refund by filing a GST F7 and maintain evidence that GST charged at the point of sale has been refunded to the customer. Next, we will be explaining the exceptions that are available for LPG. Firstly, local vendors can apply for the exception to use the import value, CIF, of the goods instead of the sales value to determine whether the goods are to be treated as LPG. As explained previously, sales value of the goods is used to determine if the goods fall within the entry value threshold of 400 Sing dollars. However, if the local vendors are able to determine the value of the transportation and insurance fees at the point of sale, they may prefer to use the import value of the goods instead of the sales value to determine the entry value threshold of the goods. Import value is determined in accordance with Section 18 of the GST Act and generally comprises the cost, insurance, and freight (CIF) value, any customs duties payable, commission, and other incidental expenses. Local vendors can make the election to use the import value by completing and submitting the LPG entry value threshold election form. Once submitted, they may proceed to use the import value instead of sales value to determine the entry value threshold of the goods. The second exception is the exception to apply entry value threshold on a per-consignment basis instead of being applied individually to each item of goods supplied. As explained previously, entry value threshold would apply individually to each item of goods supplied, regardless of the way the goods are bundled for shipment. As an exception, local vendors may make an election to apply the entry value threshold on a per-consignment basis as opposed to on individual goods supplied if the following four conditions are fulfilled. First condition, the local vendor has full oversight of the supply and logistics chain. A local vendor is regarded as having full oversight of the supplies and logistics chain if he is either also the transporter of the LPG or he appoints the transporter of the LPG with the understanding that the consignment will not be repackaged during transit to the customer. Second condition, the local vendor has put in place a business procedure or process that enables it to determine, at the point of sale, if the goods ordered by the customers would be shipped and delivered as a single consignment. Third condition, the business procedure or process in the second condition is documented and agreed upon with the underlying suppliers in the case of the electronic marketplaces. And fourth condition, the local vendor is able to make the necessary GST adjustments should there be subsequent changes to the customer's orders. For example, change in price, quantity, or weight of the goods ordered that would affect the value of the consignment. Local vendors can make the election to use the entry value threshold per consignment basis by completing and submitting the LPG entry value threshold election form. Once submitted and able to ensure that all the conditions are fulfilled, they may proceed to use the entry value threshold per consignment basis to determine the entry value threshold of the goods. Lastly, local vendors can apply for the exception to charge GST on LPG imported via sea or land. Under the Overseas Vendor Registration Regime for LPG, GST is only applicable if the LPG is imported into Singapore via air or post. However, there may be circumstances where, at the point of sale, the local vendor is not able to determine the mode of shipment of the goods. For example, whether the goods will be shipped via air, post, sea or land. Local vendors with genuine difficulties in determining the mode of shipment of the LPG at the point of sale may seek the controller's approval by completing and submitting the application to charge GST on LPG imported via sea or land form to charge GST on LPG imported via sea and land. As IRAS would need time to process the application, local vendors are advised to submit the application form early. Similarly, to address instances of double taxation, the approved local vendors are also required to provide relevant GST information down the logistics chain for the imports via sea and land. Logistics service provider would also need to provide the information to Singapore Customs in a timely manner so that import GST will not be imposed on goods when GST was already collected by local vendors. Moving on, we will now explain the time of supply rules. For the time of supply rules, once the local vendors are GST registered, they will need to apply the time of supply rules on each transaction to determine when the supply is made, as they are required to report the supply and account for GST in their GST returns based on the time of supply. The time of supply is triggered by the earlier of, when payment is received, or when an invoice or any equivalent document that serves as a bill for payment is issued. Example 2 illustrates the time of supply rules. In this example, the invoice is issued on 22nd March 2023 and the payment is received on 23rd March 2023. Based on the time of supply rules, the time of supply is triggered at the invoice issuance date on 22nd March 2023, as the invoice is issued earlier than the date of payment. If your prescribed accounting periods are January to March, April to June, July to September, and October to December, you shall account for GST on the LPG or remote services supplied in the prescribed accounting period ended 31st March 2023. Next, we wish to highlight that transitional rules will apply to transactions that straddle the implementation date of 1st January 2023. Do note that this slide is applicable to local suppliers of LPG, local EMOs, and local redeliverers that are recorded as the suppliers of LPG. A supplier of LPG will be treated as straddling the implementation date and subject to the transitional rules when it meets the following two conditions. First, the supplier's invoice is issued on or after 16 February 2021, but before 1st January 2023, and second, the goods are removed or made available to the customer and payment is received on or after 1st January 2023. Such a supply is subject to GST to the extent of the lower of the value of the payment received, or the value of the goods removed, or made available to the customer on or after 1st January 2023. We will illustrate this with an example. In example 3, the invoice is issued on or after 16 February 2021, but before 1st January 2023, and the goods are removed or made available to the customer, and payment is received on or after 1st January 2023. As this supply meets the two conditions for the supply to be treated as straddling the implementation date, this supply will be subject to the transitional rules. GST will be applicable on the remaining payment received of $100 on 2nd January 2023, as the value of the remaining payment is lower than that of the value of the LPG removed or made available to the customer on or after 1st January 2023. note that the slides on the transitional rules for non-digital services are only applicable to local EMOs that are regarded as the suppliers of remote services on behalf of overseas suppliers. The transitional rules will also apply to non-digital services. A supply of non-digital services can be classified as a discrete supply or a continuous supply. Discrete supplies refer to individually separate and distinct supplies, such as online examination services, legal advisory services. Continuous supplies refer to supplies that are progressively and continuously performed over a period of time, such as wealth management services, subscription to memberships in professional association. A discrete supply of non-digital services will be treated as straddling the implementation date and subject to the transitional rules when it meets the following two conditions. 1. The supplier's invoice is issued on or after 16 February 2021, but before 1 January 2023. And 2. The performance of service and the payment received occurs on or after 1 January 2023. Such a supply is subject to GST to the extent of the lower of the value of payment received or the value of the services performed on or after 1 January 2023. In example 4, the invoice is issued on 30th December 2022. The payment of $200 is received on 2nd January 2023, and the remaining services are performed on 4th January 2023. The invoice is issued on or after 16 February 2021, but before 1 January 2023, and the performance of service and payment received occurs on or after 1 January 2023. This discrete supply of non-digital services will be treated as straddling the implementation date and subject to the transitional rules. GST will be applicable on the remaining portion of the services performed on or after 1 January 2023, amounting to $100, as the value of the remaining services performed is lower than that of the value of payment received on or after 1 January 2023. A continuous supply of non-digital services will be treated as straddling the implementation date and subject to the transitional rules when 1. The supplier's invoice is issued or payment is received before 1 January 2023. 2. The services or part of the services are performed on or after 1 January 2023. And 3. The services are performed pursuant to an agreement made on or after 16 February 2021, but before 1 January 2023. The portion of the service performed from 1 January 2023 will be subject to GST. In example 5, Platform A is an electronic marketplace operator. It lists online in-person tutoring services provided by UK company B to clients worldwide. Such services are provided to the customer via video calls. Platform A contracts with a non-GST registered customer in Singapore on 1 November 2022 to provide tutoring services for the period covering 1 November 2022 to 31st October 2023. Platform A invoices its customer on a quarterly basis and issued an invoice on 1 November 2022 for its services for a period of 1 November 2022 to 31st January 2023, which is 3 months. As the supply is a continuous supply of non-digital services which straddles the implementation date of 1 January 2023, Platform A is required to account for GST on the payment received before 1 January 2023 that is attributable to the portion of services performed from 1 January 2023 to 31st January 2023, which is 1 month. Lastly, we will be explaining how you, as a local vendor, can best prepare yourself for the OBR regime. First, you should check whether you are liable to register for GST under Singapore's extended OBR regime. You should check if you will be making taxable supplies exceeding 1 million, including B2C supplies of LPG and remote services to Singapore, based on your past sales and future business plans. If liable, you should proceed to register for GST accordingly by submitting the GST registration form, EF1, and the necessary supporting documents. You should also start allocating sufficient resources to system and process changes to comply with the regime's requirements. You should ensure that your system can identify whether your customer belongs in Singapore for supply of remote services and allow GST-registered customers to provide their GST registration number during the checkout process. You should also ensure that your system can identify whether the goods are LPG at the point of sale and whether your system can compute the correct amount of GST to bill to the customer at the billing stage. In addition, you should work with your logistics provider to ensure that the relevant GST information is passed down accurately to prevent double taxation for the supply of LPG. Last but not least, you should determine if you require the exceptions that are available and to submit the request accordingly. You are encouraged to apply for approval early so that there is sufficient time to process the applications. For more information on the OVR regime for LPG and remote services, you may refer to our web pages and the e-text guides on our website. For your convenience, we have included the links in the video description below. If you need further clarification or have further inquiries, you may write in to us at gst@iras.gov.sg. With that, we have come to the end of the seminar on Singapore's extended OVR regime. We hope that through this seminar, we have helped you to understand the rules and mechanics of the extended OVR regime and how to get ready for it. Thank you for your time.